Warren Buffett once said, risk comes from not knowing what you're doing. Learn how to mitigate risks in real estate investing through proper LLC and bank account setup. Welcome to Strategy Saturday. I'm Charles Carillo, and today we're going to be discussing setting up LLCs and bank accounts for real estate investing. Entities and LLCs can get complicated and confusing with so many different asset protection strategies out there. In this episode, I'll explain how to structure LLCs and bank accounts, whether you own one property or 30. I'm not an attorney, accountant, or financial advisor. The correct way to utilize this information is to listen, understand my strategy, and then speak to your advisors to decide what works best for you. So why are LLCs so commonly used when investing in real estate? Number one is limited liability protection. LLCs provide limited liability protection that typically shields its owners' personal assets. LLC owners are typically referred to as members. 2. Pass-through taxation. LLCs are flexible regarding taxation since they are treated as pass-through entities for tax purposes. Profits and losses flow through to the individual member's personal tax returns. If you own an LLC by yourself, your profits and losses will be reported on your personal tax returns, minimizing hassles and tax preparation costs. 3. LLCs are easy to manage. In most states, they are inexpensive to set up and renew, and they have fewer formalities and administrative requirements than other entity structures. So starting out, when I began investing in real estate in 2006, I purchased my first couple multifamily properties in my own name. They were small multifamily properties. Years later, I quitclaimed those properties to an LLC, meaning I changed the ownership from my personal name to the LLC when I actually had some assets to protect with the help of an attorney. And it cost a couple $100, and I would suggest the same strategy with your first rental properties. Unless you're purchasing commercial multifamily properties, so 5+ unit apartment complexes or any commercial properties for that matter, from the beginning, or you have a sizable net worth, I would purchase your first rentals in your own name. The whole process will be easier and simpler, and you'll most likely be able to obtain more competitively priced financing as well. Really, the main thing here is just don't waste time with all these different structures or all these things that are going to be hindrances to you actually buying property. Go out, buy a little multifamily property, learn how to be a landlord, and then as you start growing some wealth, some income, then you can start putting together your LLCs and really a whole asset management plan. So now that you've purchased your first rental property in your own name, set up a separate checking account in your name that is strictly for the property. This account is only for the property's funds, rent, and expenses. Possibly if you purchase another small rental in the future, you can use the same checking account for both properties, but the key is having a separate bank account for your first 1 or 2 properties. Next is set up a savings account or money market account in your name for reserves. I actually had a savings account for years that was just for real estate investing. I initially deposit funds into it for future repairs and future property investments, and I added to it regularly for my other business activities while also depositing a portion of the rent I received into it every month. The amount you add to it every month is really dependent on the condition of your properties, but get into the habit of building the real estate reserve fund every month. Lastly, depending on your state laws, you may need a special account for security deposits from your tenants. We typically have another bank account where we put security deposits only, but make sure you fully understand your state's laws around this and you follow it. So how do you actually open an LLC? So after you've purchased several units, I suggest forming an LLC. The number of properties you put into the LLC depends on your net worth and the value of the properties. If the properties have a lot of equity, I might put them in their own LLC. I suggest you have an attorney set up the LLC and quitclaim your properties, but you can find online services or do it yourself. For example, I use an attorney in my home state of Florida who only sets up entities and they charge a couple $100 to do it. When I renew the LLC the next year, I change the registered agent from the LLC formation attorney to my own real estate attorney. Either way, the LLC formation process is pretty straightforward. Number one is you choose a name. Search your state's Secretary of State website to find an available name. 2, choose a registered agent. Usually when you're doing it through any of these online services, they're going to put their name as a registered agent. If you can choose, use your real estate attorney as a registered agent or just have your real estate attorney set up the whole thing for you. And the agent's going to be who gets served paperwork if your LLC is ever sued. So it's just important to know that, make sure that they are actually available to be served when or if your LLC is sued. 3, the articles of organization are created and submitted to the Secretary of State. So your attorney will do this if you hire one. And 4, drafting the operating agreement, also done by your attorney, but this document spells out the ownership structure, member responsibilities, profit distribution, decision-making responsibilities and processes, etc. And lastly, 5, go to the IRS.gov, obtain an EIN or employer identification number. Your attorney will charge you for this, but you can go and do this yourself if you want to. Next is opening a bank account for your LLC. Now, the process of opening a bank account for your LLC is very similar to opening a personal bank account, but you need all the documentation previously mentioned, all the LLC paperwork, and you must bring this to the bank or provide executed scanned copies if you're applying online for an account. So now you're all set, LLC set up, bank account's all set up. A little caveat here, if you're self-managing properties, and I don't want to make this like overly complicated, but once you have several properties, at the same time you're setting up an LLC to protect those properties, if you're self-managing, you should set up a separate LLC for property management. Now this LLC, this property management LLC, will write the leases, contracts, and vendor agreements. Your tenants will pay rent directly to the LLC, this property management LLC, and you'll pay all bills and expenses out of this property management LLC. The property-specific LLCs, the ones that own your properties, will never do any business with anyone. Remember that in most, if not all states, non-licensed real estate professionals are prohibited from managing real estate they do not own, meaning that this property managed LLC will just be for assets that you own. Another caveat, for net worth over $1 million. So once your net worth surpasses $1 million, I would highly suggest you speak with an asset protection attorney. At this stage of your real estate investing journey, an asset protection strategy that involves only LLCs will usually not suffice. As the name states, LLCs are limited in their protection, and as your portfolio increases, you become more of a lawsuit target. Feel free to message me if this describes you, and I can introduce you to my asset protection attorney. I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.